Good morning, everybody. Uh, so this is the Friday, the 30th of December. So we just have one more day left, the 31st, which is Saturday. No trading on that day. And as you can see, I've got my cat here with me. He likes to sit on my lap, I guess, when I'm doing these streams sometimes. So, um, what are we looking at today? Let me pull up my other screen. Okay, so here we go. So this is the current trade that we're in right now. It's just a euro US dollar trade. Um, Now I'm gonna get into what happened with this big spike the other day. So this candle, it's a 160 pip candle. I'm gonna try not to get into too many details yet because I know that it takes a few minutes for some traders to come in here. So I'm gonna wait a couple minutes. For those of you that are watching this stream later on, I recommend fast forwarding a couple minutes because I'm going to probably try to wait um, 1 or 2 minutes to see if I can get some live traders in here. In the meantime, I'll talk about the trades that I had on the uh, pound yen. Pound yen, I had 3 positions, and these positions were well, the original one was taken here. The reason why is because of the triple bottom here, and I was expecting this to continue on the upside. It did not. It broke this level here, made a new low. The new low was a whole number, and that was the 143 level. So I entered that one just based on the relevance of the whole number there. Uh, and it did bounce a bit, just not enough, and it ended up going down further. Now the third position that I entered, I was actually pretty proud about this third position, and also the first two as well. I was pretty confident with this trade. Now, why was I so confident with it? Because it was taken off of the 4 hour. The 4 hour chart. Now, the 4 hour was definitely on the upside, and it's been in an uptrend. You can see where my original position was based around, or original 2 positions were based around this level. And I thought this was a pretty substantial level, and that the price could react to it. So that's why I entered trade 1 and trade 2 here. And the third entry was based on a couple of factors. Number one, inside candle happened here, and it did push lower. But when I saw this inside candle, I thought, well, okay, there's a, a good chance we could still see some upward movement happening sometime soon. I didn't enter then, though. I waited a little bit longer because my second position was just a tad too close to that potential entry. So what I did was I went back to the 1 hour. I was watching the price, looked at these candles, didn't see much action, and then saw this push back down in the break at the last swing level. And then uh, it's not quite a reversal candle, but it's an indecisive candle. Then I saw this happened. This is an inside candle on top of this one here. Um, Not a huge or great indication for a bounce here, but it was enough for me to enter a position right after that. So you can see where my entry was right on this candle, right on the open of that candle. So I saw these 2 candles and thought this is probably a good time to bounce in for that pullback or that continuation that I'm looking for. And it did happen. It went up quite a bit. All trades were closed out here for profit, and it was a great entry. I hit the very bottom of or close to the very bottom of the move. I was about 30 pips or so late, but it was pretty near the bottom, which I was pretty happy about. And a lot of times I can actually hit those spots. And I'm actually decided to take on some students, um, and we'll be advertising on eBay and some other places, not forexsignals.com, where I'll be giving out free consultations to individuals. So if you're interested in training, um, over the longer term and knowing how to trade the forex, I can teach you all I know, um, and all my techniques, and do give you a free 30-minute consultation, go over what you'd be learning, um, and how you would learn it, and how the whole process would work, and also some, you know, starting into your trading, into the trading mechanics that I do as well. So you actually get something out of that 30 minutes, that free 30 minutes as well. Um, so that's something that I'll be starting pretty soon, probably the beginning of next week. All right, so but I'll still be doing my streams. I'll still be doing my streams, maybe a bit less depending on the reaction to the private sessions that I may be taking on. Okay, so that's what's happening with my uh, pound yen trades. We still have some traders coming in now. Um, so just to go over that again, first entry, first entry was taken at the support level here, and the second entry was entered on the whole number, and the third entry was entered after two reversal candles, uh, and that's was a pretty good entry, and then all orders were closed out for profit at the same level. I ended up pulling out of those three trades. So we had a minus $23, profit of 4.8, and then a profit of 32. I think I ended up pulling out about 20 or 25 pips. Let me just see. 75, 12. It was about 30 or so pips out of this move. So I'm pretty happy about that. It did move higher, but I didn't want to wait for that. I could have, but in this case, I decided not to. Okay, so moving on to the Euro US dollar. So what we're going to talk about now, or go over for the next few minutes, is uh, the trade that I'm currently in on the Euro US dollar, why I took it, and then we'll talk about the other trades and see other pairs and see if there's any trades that we want to take as well. Uh, okay, so the Euro US dollar, a lot of people don't know why this happened. Uh, the rumor is that it was a problem because of low liquidity, um, and it caused a big spike in the market once some big orders actually were executed. So uh, this problem happened. It's similar to it's similar to an issue that happened on the pound back a while ago, if you guys know, but that one was a lot bigger. It was the one that was like 1,000 or so pips. I could try to find it. There it is. Yeah, 1,000 pips. Similar situation where they're thinking it's either low liquidity or a computer glitch or something like that. Um, and sometimes these things happen. It's just really hard to know why they do. And there was a similar one last night, almost during the same time frame as the pound did. It was late in the Japanese session, um, and it was 160 pips push up. Very unexpected. But if you guys remember, I did take my trades on the Euro US dollar, and I did take some profit too. So back, I took trades on the FOMC here, and then later on I added to it. I closed it out here. It did go lower after that, right after that, but then it shot back up, and then this happened. So I would have been in a bad position at this point. And so it actually worked out pretty well that I closed my trade out when I did because of that flash move yesterday. So I am short again on the Euro US dollar. I entered short here after this inside candle. Now, when this push up happened in just a matter of minutes, about 15 or 20 minutes, I saw the cutback here, and also realized that this is kind of an anomaly situation here, where there was a big push, um, and I still feel like there's not a whole lot of reason for this candle to happen. There wasn't anything in the news. It was some simple price action play by big players, um, and it could be potential profit taking as well, or to try what a lot of people like to say is knockout stops. Um, or it could be a way for some traders to get in at a better price with the continuation of the trend back down. So there's a number of factors that could be caused by it, but I still feel like this is going to be on the downside. It may be slowing down. We're at the end of the month, so I expect this to be a slow trickle down, and it could actually do some ranging until next week, at least for the rest of the day. But I do expect this to continue down to lower levels at some point. That's why I've entered short. I've entered short at pretty low risk, nothing really substantial. Um, but I will continue to hold this for a bit. Uh, how long? I'm not sure. I guess I'll just have to wait and see what if anything changes in the future. Um, okay, so the pound is finally having some recovery. Uh, it's been a while since the 16th of December and before. It's been having a rough go. This is one of the bigger pullbacks it's had really since the 17th of November. Um, this move here and this one here, they're similar. This one's a little slightly larger than this one, but it's one of the bigger pullbacks that the pound has had in quite some time. Um, what that means is potentially a good place to enter short again, or to start looking at least to see if you could find a good place to enter the market on the short side. That's typically what I'd be doing. And right here, so this level could be a good place to do that. So it doesn't mean that we just enter right away, guys. It means that we actually we need to wait for some candlesticks or some hints that this isn't going to continue, or this is slowing down with the possibility for it to eventually go on the downside. Right now we have three really strong candles. We want to see this this push or this movement to start slowing. Once it starts slowing, we'll start to get some candles that show us that this could have a pullback or a continuation back on that downside. But we need to be patient with it. It's not just about I think it's going to go down from here. This is good level. I don't like just relying on levels by themselves. I like having some kind of confirmation on top of that with the candlesticks. So I recommend waiting to see when a good time to enter that is. And in my opinion, it's not yet. Okay, on the pound yen, this has been kind of flat. I haven't been liking to trade this pair recently. You could say that it's in a channel right now with these levels. Uh, Unsure right here because it's right smack in the middle of this channel. It could easily go down, but it also could go up. It could just shake around for a bit. It's a little bit flat, not great for trading. I recommend still staying out of the yen, the US dollar, Japanese yen. The euro pound. Now, I'm going to talk about this pair a little bit because it is the pair that my EA trades. And my EA just closed out for profit, guys. And just now saw that. So you can see all the orders. Um, so order 1, 2, 3, 4, 5, 6, 7. That's a lot of orders, right? But the thing is that the EA is actually taking it at the minimum risk on that. So it's at 0.01 lots. So it's really low. Now my recommended level or balance is $1,000 on this EA. I'm using it at 500 because I can get away with 500. 500 is the maximum risk level that I can get away with. So I'm actually high risk with my EA right now. Um, but it should work long term, and it does work. But I do recommend with the $1,000 balance just to be safer. $500 is not a lot to lose. I'm not too worried about that. All right. So what's happened here? Um, the uh, the seven, I think it's 7 orders, 4, 5, 6, 7 orders, maxed out here. That means I ran out of margin because I'm only using it on a 50 to 1 leverage account. So I ran out of margin after 7 orders at 0.01. Um, and so that means I can't enter more trades on this wick up here, unfortunately. So I enter trades every 20 pips, and I would have had another 2 or 3 pip trades up there at the top of this area if I had $1,000 account, which I didn't. So I ran out of margin, but that's okay. It's all right. I still have a lot of room. My max drawdown was about 20% on the trade, on all these trades altogether. And then I still had that same cutback that I was looking for. The difference is even though I took profit at this level on all my trades, if I would have had a couple more entries like I should have had on a larger account, then I would have had my take profit hit much higher, probably in this area or so, or just a bit lower. Um, and so I would have been out of the trade just slightly earlier. So what this looks like, let's see if I can pull up my FX book. Okay, so this is what we're looking at today. You can see that the total profit from those trades, all those 7 trades that closed out, was 1.25%. And it says for this week, 1.25% as well. The overall profit is on this account. I started with $500, is now $36 since I started. And that was, we're now in 2 months. So this month right now, I'm at 5% profit. And my max drawdown, at least what it says here, it says it's 13%. I don't think that's quite right. I'm always here to be honest with you guys here. Um, and I don't think 13% was the maximum drawdown. As you can see, it shows here on my stats, max drawdown was $120.72. I believe that was at the peak of this move here. Now, because this peak happened so fast, it's likely that my FX book didn't catch it. So it shows you right there that you can't necessarily trust everything that you see on my FX book. And I want you guys to be aware of that. So what you're looking at my FX book, if somebody's drawdown is showing as lower or higher, it might not be an accurate number. So right here. Um, and you won't really know until the trader does exactly what I'm doing with you now, showing you the difference. It's pretty substantial. That's almost 10% difference in drawdown, which unfortunately I don't like admitting, but 22% is okay. I feel like anything under 30% is a tolerable drawdown in forex trading. And right here, 13% is not quite accurate, but um, it's okay because I guess you now know the real amount. Okay, so let's refresh the page, make sure everything is done. You can see uh, how Oenda works. These are withdrawals that just from the fees from Oenda, which are actually quite low. But you can see the 7 trades here. You can see that 3 were closed out in the negative of pip amount, and then 4 were closed out in positive, giving me an overall profit of 1.25%. That's called basket trading. Now, unfortunately, the earliest trade was in for 8 days. Sometimes that can happen. I know that the longest trades that have happened on my EA were about a month, about 30 days or so, taking a basket of or group of trades to close out a profit. Um, and that's fine as long as they close out in profit. But you do have to wait it out for a while. And I don't mind doing that. So it's continuing to go down in a big way. It's because the pound is shooting up still. These pairs are correlated. So if the pound is pushing up, then the euro pound is likely pushing down. Um, and it's vice versa. If the euro is going up or going down in a big way and the pound is flat, then the euro can actually push the euro pound as well. But the pound, since the Brexit, has been a driving force for the euro pound. And whatever happens with it, it's because the Brexit actually caused a lot of volatility in the pair. on the pound, causing the pound in general to ride the euro pound as a whole. And that continues to be still there a bit. So keep that in mind when you're trading. All right. So we're going to move back to the charts and talk about the rest of the pairs. So we mentioned about the UJ, not much going on there to trade. The pound is done. Okay, so there was a pretty good entry here. Uh, we did hit this top level right here on this candle, and there we did have an inside candle here. So the nice bullish candle, and then the inside candle right after. Now they're pretty big candles though. A little scary, but it's something that I would consider trading. And then where would you enter your position? That's pretty easy. You'd enter it right after the candle closes. So right here. It did shoot up a bit, and then it started moving back down. I think it's going to range in here a bit, um, but still the entry stays the same. Now I didn't take that position. Why? Because I'm in on the euro US dollar. I don't want to double up on euro pairs. Um, Even though this may be slightly different, it might go down slightly more than the euro US dollar, but I don't want to be in on too short positions on the euro um, on this account. And that's typically what I do. I try to not go in too deep on multiple crosses. Okay. Um, so this entry is not necessarily valid anymore, but if you can get an entry here, so if this candle bounces back up a bit, you could consider entering at this level and then shooting down a bit. Take profit, so let's mark the entry. Okay, that would be the entry for the trade. May take profit. So this is technically a counter counter trend trade. So if it's a counter trend trade, that means you're going to be looking for a lot less profit on this position. This trade almost hit profit already. I would typically look for 20 to 30 pips on this trade. Um, so it almost hit that. It actually hit about 19 pips, and now it's starting to bounce up a bit. If it does bounce up, take an entry and look for probably about 30 pips on the downside. Um, so not quite there yet. We're still a good 6 pips away from the entry. Okay, let's see here. Other potential trades. So this is the auto USD has been pretty heavily on the short side lately. If we look on the larger daily chart, we'll see that overall it's been in a downtrend since November, since the beginning of November. Uh, and recently on the 1 hour, it's starting to have a push back up. Now, the biggest point for reversal was here, and it did go back down, but it hit that same level. I actually hit this level here. Actually, I'm going to load that on chart now and show you. It's not showing all my history. There it is. Okay, so I did hit that continuation of the trend here. I was a little bit early. I did push up a bit higher, but I was looking for this level to be hit and then the trend continuation on the downside. And it did push back down and hit that same level. And this is kind of what I wanted to show you guys is even when trading with the trend, you can take a few more pips than typical when counter trend trading. In this case, I did take 33 pips, which is still 13 or 14 pips more than what I typically take with counter trend trading. I usually would only shoot for 20 pips here. Uh, but it did move a bit more. Now, my entry was based on the swing levels. And this swing level here in this area was pretty good for a continuation on the downside. Now I saw that this level had reversed in the past, or had a pullback here. And so the chances of having a pullback again were possible. And so I didn't want to take any chances by holding this too long, and I closed it out. And this is a perfect um, example of why I do this. I saw the two candle potential reversal here. And I also saw on the crosses, on the USD crosses, that there could be a pullback here, giving me hints. And so I closed it out for 34 pips profit. And then it did continue to shoot up from there. So it kind of reassuring that I am able to still read the charts in a decent way. At least for now, the charts actually obeyed what I wanted them to do, and it's because I was basically just looking at the hints that they were giving me. Um, a lot of traders don't think that it's possible to really know how what's going on in the market, but we do get hints with candlesticks and levels and pricing on the technical side, and we do also get those hints on the fundamental side as well. We need to know how to react to those hints and the appropriate action to take um, with the hints that we're getting, because nothing's ever really sure. Everything that we do is um in trading is a projection, um, because we don't really actually know what's going to happen. And the thing is that because of that, we have to be very careful with our money management and how we approach the market. And because we don't truly know, and we have to make educated guesses in order to profit in the market. Um, and and so that's what I'm here for, is to help you guys decipher um, or figure out the market so you can have the correct discretion, as I do, and as other traders, good traders, do as well. Um, and so here the the odd USD did push back up. Now the thing is that's really important to notice is the level here at near the 72.72 level was broken. Now we had a little bit of insecurity here with the potential push back down that was clearly shot out or canceled out once this candle came into action, and then it pushed back up. Now this candle was pretty intense. It was in somewhat of an engulfing candle, and price after that point, so in this whole area after, never broke this level. Continues to ride up. Um, so this level was tested a couple times and threatened to push back down. Didn't happen, and it eventually broke that level. So what that means from here on out, it means that there is potential for this to continue to climb. So we have the level or the support level here, and the swing high, or the last swing high, was finally broken. Now, if you look at the previous levels since really the mid-December, you'll see all these swing high levels, and most of them are lower, and constantly lower highs until it's broken here. So what this means is it doesn't mean that it's going to for sure push up. Like I said, we never really know, but there's still uh, in my opinion, there's a lot of probability that it could the likelihood of it pushing up is higher than it going down at this point, because it's starting to have a little bit more momentum in here, and the push is starting to slow down. And you can even see this on the 4-hour chart too. And the easiest way to see that on the 4-hour is, well, we have an inside candle here, inside candle here. All right, so when that happens, there's usually a potential for a bounce, right? Well, we didn't get them. They don't always happen, so we have to try to choose our battles, and if we do can't get canceled out on those, then we look for a better opportunity. Now there was one here. Now you can see that not all the time does do my ideas work. But I also basket trade to allow me to give myself a few chances to actually get that right. And because when we do get it right, I actually am able to nail a position uh, pretty much right when it starts its reversal. So that's like 16 pips. So when I see this, I see a candle like this, that's when I'm able to bounce in right after that. Now, I didn't actually necessarily enter on that trade there, but because it was a counter trend trade. Um, but typically, if I was looking for counter trend trades, I would have been in on this cycle. Yep. So first trade would have been entered here. Second trade would have been entered here, and a third trade would have been entered at this bottom level. The thing is that we'd still be in this trade in drawdown. But the important thing is if by chance I happen to miss this for any odd reason, meaning I had stayed out of the trade because of the fundamental analysis that was coming out was very heavy to stay out of the Australian dollar, then it's possible that I might not even have taken these trades. I don't just blindly take trades based on the price action and what the price action is showing me. Even though these are inside candles, that's great. But I also need to see before taking those positions what's being said in the market about the Australian the AUD USD. Is it uh, is it expected to push lower? How weak is the currency? Is there any end in sight? All that kind of stuff. It's necessary to know that before taking a position. Um, but it did find, but price action does behave to those levels. The thing is that why these levels were no good is because the currency, the Australian dollar, was getting too much pressure, either from the currency itself or because of the USD. And the USD during this time was actually pretty strong. And the strong USD means that even with the price action showing us possible bounces or reversals at that point, they were canceled out by the strength, the overwhelming strength of the currency, of the USD currency against the Australian dollar. Um, so I actually did stay out of these trades because I was already in on the Euro US dollar and I didn't want to double up during such a heavy USD streak going on when the USD was gaining so much value. Um, so that's the discretion that I'm talking to you about, and that's what if any of you want uh, solo training or one-on-one trading, that's how I can help you, is to help you decide um, where when and where the best time to enter the market is um, at the correct risk. Now, some of you know that I did take a very high risk trade on the Euro US dollar. Now, I'm not proud of the actual risk management of the trade itself, being one lot right here on a $2,400 account. But the actual entry I am proud about. I'm proud about that entry because it was good, and it was a well thought out entry, not just because I entered and I got lucky, because there always is luck involved in a position like that. But uh, I also did my research on the trade, and I took it for a reason because I knew I had an advantage, and the potential for this trade going in my favor was high, and so that's why I took it, and it did go in my favor in a big way. Now I did close it out here because I was waiting for this to push lower. I thought there was potential for it to push lower, and it didn't happen. All right, so right now what we're looking at on the Euro US dollar is the push back up. Unfortunately, this area is showing a very insecure market. I do see inside candles here and in here, but it's a little messy. It's messy because of this candle. This candle kind of messes up the uh, the fundamental shape of the candlesticks in this pattern, which makes things a little bit tricky to see. So when it comes to price action, it is tricky in here. And we don't have a lot of fundamental to go on right now either. So I will hold on to my position. This position is based somewhat on price action, but it's mostly on the fundamental side. I still think that there is a lot of strength going for the USD right now, especially with Trump coming into presidency. Um, and I think that I still believe that uh, the traders holding on to their large short positions are still holding on to those. They still need a better reason to exit or to cut their shorts and take profit. Once that starts happening, you may see it continue to push up. Um, but right now, I don't think that is the case yet. I could be wrong, but we'll just have to wait and see. Um, so, when I was telling you guys about before, we needed an area on the pound USD to show us that there is a slowing of price action at least. Okay, and we see that these levels, in particular this one, was broken already. It looked like it was going to continue its trend there, but it didn't. Shot back up, right? Um, so what we're seeing here is the push up and the reversal candle. Okay, so the reversal candle here um, is forming, but we still have about 50 minutes left of the hour. Now, if this candle actually closes where it is right now, um, then I may enter a position here. Um, since I'm already holding one on the Euro US dollar, it's possible I may not do this, but it would be a pretty good entry for those of you trading. Why? Because we still have this strong level here. And the pound USD is in a downtrend. See, I mean, it's a little sloppy, but it's still in a downtrend. So that could be a good place for an entry. All right. Uh, let's see, cover a couple of other pairs. I already talked about the pound Japanese yen and how this inside candle showed some potential. I did think that this was a good entry, and I'm going to recommend this pair as an entry for you. This is my recommended position is the Euro Japanese yen. Um, it is a counter trend trade, so keep that in mind. Uh, and since it's a counter trend trade, I'd only recommend taking maybe 20, 30 pips. So being very conservative with the position. Um, and you could have, if you want to do stop loss on the position, I would I would look at a stop loss above the high, 3 to 5 pips above the high. Take profit, roughly 20 to 30 pips. So your stop loss would be about 60 pips, and your profit would be, let's say 30. So it's going to be about half the amount of the actual stop loss. A lot of you may not like that, but it does give you a little bit more flexibility on the price bouncing back up to that level and hitting our take profit. So that's my recommended trade. Keep it simple and easy. Um, Typically, if it were me, I would be looking for more entries instead of making this my stop loss. I'd actually make it as a potential re-entry. So this would be order 2, order 1, and then maybe order 2. I might actually jump the order 2 up a bit higher. I might look for an order 2 up there near the whole number at 123, 124. So that's a difference of about 74 pips. So order 1 on order 2, and then I'd wait for the order 2. So order 2 up here. If the price did bounce up there and it went back down, I would take my profit. I'd have a losing trade on the first. On trade 1 would be loss, and trade 2 would be a profit, but the profit from trade 2 would be more than loss of trade 1, um, giving me an overall balance increase. All right, let's see. I think that's probably going to be it for today, guys. There are some other pairs, some of the exotics. Um, I mentioned to you before already in the stream about the positions that I took in profit. This is manual. These are manual trades, and I was able to hit a very good position at the bottom of on the Japanese yen, um, the pound Japanese yen. Not much going on. There's also a position maybe forming on the US dollar CAD. Uh, and let me see if this is in trend. It is in trend on the trend up. That could be a pretty good entry, depending on what happens in the next 45 minutes. If this candle closes inside, it could be a good bounce, a decent pullback, especially after the multiple uh, bearish candles. If this is a bullish candle, uh, we could see a bit of a pullback there, or even a trend continuation from that point, hitting this level. Take profit for that trade, for this potential trade. If it closes the way it does, it would be up here. That would be a good, well, I'd probably shoot for less than that. I'd probably look for either take profit at the 34.6 level or the 35 level. I'd probably shoot for the 35 level here. That would be about 54 pips on this trade. So like I said before, since it's not a counter trend trade, I can shoot for a bit more pips. So take profit would be up here. That's pretty much it for today. Uh, we're getting a wick candle on the Euro USD. Keep in mind the pound Australian, the pound USD with the inside candle forming. Nothing on the UJ. The push down here is possible. Nothing too much on the Australian dollar, although I think it may be starting to creep up. You could look for another position to enter. The next one I'd be looking for is likely here. So if it shoots up a little bit higher and hits that 72.7 level, then I would look for a potential re-entry or a position, a short position on the downside. Okay. All right. I think that's it for today, guys. Thanks for watching. And I'll see you back on Monday. And please let me know if you want a free consultation for private training sessions. Again, I'm giving them out for free, 30 minutes. Um, and we'll go over what I do and how I plan to do it and how I plan to help you in trading. And I can teach complete newbies as well, um, and help you profit in the forex market. All right, thanks so much for watching, and I'll see you later. Bye.